Now you've found your perfect property and you want to move forward and purchase it. And the next question you're asking is, how do I finance a commercial property?
Yes, we're here to tell you all about financing. I'm Allie, and this is Amanda with ProspHer Collective, and we are going to cover the 3 most common ways to finance a multifamily.
And Allie, what are the 3 ways we're going to discuss today?
The first is commercial banking. The second is agency financing, and the third is seller financing. So Amanda, tell us, what is commercial banking?
So commercial banking is probably one of the most popular financing options available. It's done through your local bank or credit union. It's pretty fast to secure a loan through your local bank. And it's normally done with a term rate of 5 to 10 years. And there is a higher down payment typically with these loans of anywhere from 20 to 30% down on the purchase price. You're gonna wanna talk to 3 different banks to get their different terms and rates.
So you're saying each bank will be different?
They will be a little different. In our experience, when we typically talk to 3 or 4 banks, and they're all a little bit different on the down payment that they require and on the rates. So you can kind of negotiate between the different banks to secure the best rates and financing for your property.
Yeah, and with banks and credit unions, right, they all have a balance sheet. So you may go to bank A and they may really want multifamily properties right now. But then you go to bank B and they're like, oh, we can't take any more multifamily. We already have a really high balance of multifamily loans. So each bank is going to have different things that they're looking for and different criteria that they're able to give. Like right now, for example, we just had to refinance a land development we're doing, and we were at a traditional bank and we went to a credit union, and the credit union, because they're local and small, could do much better terms and have much more flexibility in what they were able to do for us. So you will be surprised. You would just think, oh, I'll just go to bank A and it'll be the same as all the rest. But do make sure that you're shopping around to multiple banks to get the best deal.
And you can kind of beat them up a little bit between
for sure.
them, because they will want your business.
Not physically, please.
No, but they will want your business. So you have more negotiation and flexibility with commercial loans through your local bank.
So what would you say are the biggest highlights of why would you go to commercial banking out of the other 2?
It's faster. It's more flexible, more fluid. There's less restrictions, and you get that fixed 5 to 10 year rate. If you're wanting to do a cash refi on your property, the commercial lending is the way to go through your local bank.
And I also love that you can build those local relationships, right? Like we know all of our bankers really well and they want to work with us because we have a good relationship. So that makes it nice versus the next one we're going to talk about is agency debt and building relationships there.
So Allie, tell us about agency debt.
Absolutely. So agency debt is debt owned by the government. They want to make money just like anybody else, and they actually have programs to make sure that we have housing in America. And the most common ones are Fannie Mae and Freddie Mac that you can go and get multifamily financing through.
Can you tell us a little bit about those 2 different Fannie and Freddie? Like what
they just have different. The easiest way to start with agency debt is you need to find a broker. There are mortgage brokers, and they work specifically with Freddie and Fannie, and they know all the regulations and all the things that you need to have. And Freddie and Fannie, they both have different appetites, and it does change cyclical. So like right now, like one is better than the other because interest rates are higher. So your mortgage broker will be able to tell you exactly what one they will apply to and if like your deal meets their criteria.
What are the advantages of agency debt? Like why would you choose it?
The biggest advantage of agency debt is that usually the interest rates are lower than what you can get in commercial banking, and you can get longer I mean, the term rate is usually 5 to 10, but they have some other like programs they're able to do because they're the government than your commercial banking.
So lower rates and longer terms possibly than your typical lending platform. What are kind of the downfalls of?
They have no flexibility. Once again, they're the government. So let's just say you're buying an apartment complex and you need to do some remodeling, you have some construction costs. Like, they don't want any part of that. They want the deal to already be at its highest occupancy and not need a large renovation. You would have to go through your commercial bank to do that renovation. And then Freddie and Fannie are a good option because you can get that lower interest rate. And the other downside is it's a ton of paperwork and a process. So you definitely want to make sure if you're going to go that route that you have the right mortgage broker.
So what you're saying is there's definitely not as much flexibility here as there is with your bank lending.
You can't tell the government what to do.
Okay, good to know. So what types of situations would you want to use agency debt?
If you have an apartment complex that is, you don't need to do anything, it's ready to go, you're just buying it maybe for like a low return or just some cash flow, Freddie and Fannie are great options. Oh, and let's just say, and you have a long enough closing period, right? You need to make sure you have at least 90, 120 days. If you need to close in 30 days, that's not going to be the way to go. But they do have, like right now, they're almost a half point lower than commercial banking. So if you wanted to lock in that lower rate.
So now that we've kind of discussed the advantages and the disadvantages of agency debt, I want to dive into kind of like the golden nugget of financing, which is owner financing. Can you tell us about owner financing?
So owner financing is just what it sounds like. Is you're buying a property and you want the owner to carry the note or be the bank on the property. So you don't want to, let's say it's $1 million. You don't want to give the owner $1 million of cash and you don't want to go use the other two forms. You would say like, hey, owner, can I give you $250,000 of cash? And would you let me make payments to you over a period of time?
And I guess if you agree that, yes, like this is the way we're going to finance, how do you kind of negotiate those terms and make it safe for both the buyer and the seller?
An attorney. Okay. Definitely get an attorney involved because you want to make sure you have it at the title company properly. You want to make sure you have the proper documentation. I would never say, can you imagine just going and buying something like writing on like a napkin, like I'll pay you this and this, like.
And I mean, obviously, like owner financing sounds pretty amazing because the owner is getting paid over a longer period of time, meaning it's going to decrease his tax consequence.
Yes.
It's going to spread it out over a series of years instead of one large payment in a year.
Yeah, so what you're saying, right, even if you used other financing, he would get $1 million check, let's just say, and he has to pay the tax consequence on that $1 million. But if you only paid him $250,000, then he'd only pay taxes on the $250,000.
And for the seller, I'm having a lower interest rate, flexible terms that are worked out between the owner and I, and this is going to look much better on paper for my investment than an agency debt or a bank loan in a lot of situations.
As long as you can get the right terms, right? Like you got to compare the terms of what you're getting from the seller. Like usually seller financing, you're either able to like either put less down or hopefully a lower interest rate, but it's all what the seller is motivated to do. And that really is important when you're doing your due diligence, is like trying to figure out what the seller's motivations are so you can put the deal together.
How would I find out what the seller's motivation was to even see if owner financing was possible in a deal?
Usually through your broker, right? So you're working through your broker, and I would ask that question to my broker, what are the seller's motivations? And if they're like, well, they really need cash right now, then like obviously seller financing is not going to be something that they're interested in. If they're like, oh, he's just tired of taking care of the property, he's, is trying to like just reduce his portfolio, like maybe there's some interest there because he doesn't, not saying that he needs cash right now, but He just wants to not have the hassle or headache of managing a property. And your broker might have different strategies, but we've done it where you could present 2 different offers, right? One offer is like a seller financing offer, and then the other one's like a traditional, or you could make an offer for a traditional and maybe you can't agree on the price. And then maybe when you give a counter offer, you can say like, hey, would the seller carry a portion of it or would the seller carry all of it? That's how you would get to like a seller financing. They're not going to ever probably come out and straight and say it. Sometimes they do though, I guess on listings, they'll say like seller financing is an option.
Available.
Yeah, but it's probably rare.
So would you say are the biggest disadvantages of seller financing?
I think probably just coming to the terms and agreement and making sure both parties feel safe and that you have like the safety mechanisms in there. Like I said, like using a title company where you're making your payments so that payments are actually recorded, right? If you're I'm just gonna give you, Amanda, a check, you could definitely say like, I never got that money, right?
Yeah.
So I say the biggest drawback is just coming to terms and then just making sure you go through the hassle of getting the right paperwork.
And working with a good attorney who knows what they're doing.
Yes.
So
you might have some like additional costs, right, in the upfront part of that, but you're not gonna have origination fees and like loan fees that you would normally have at agency debt or the bank. Like agency debt's fees are crazy expensive. We didn't mention that either.
That makes sense. So let's recap on kind of our 3 go-to financing methods that we've talked about today.
Yes.
We've talked about just typical financing through a bank loan. We've talked about agency debt and owner financing. Do you have any other advice to add?
I would just say like with each one of those, right? So your commercial highlights flexibility and like that you can have like local relationships. Agency, lower interest rates. Terms are usually a little bit longer that you can maybe get at a local bank. And then seller financing is the most flexibility that you can get, and usually the best option if you can get it, at least right now when we're recording these videos. 2 years ago, when interest rates were 3%, there'd be no reason to do seller financing because sellers wouldn't really agree to have a 3% interest rate. But right now when interest rates are 6+, like they're the best way to go if you can get it.
Okay, so we've told you our 3 main go-to on how we like to finance our deals. If you have any additional questions, please join our Facebook group and ask that question in the group, and we'd love to discuss it. We are also going to drop our broker questions and our mortgage broker questions that we ask in our Facebook group. So if you would like that set of questions, join our group. It's free. We'd love to have you.
Yes.
And thank you for joining us today. Bye.